The Coinseries channel is pleased to have you back. For the benefit of those who are just joining the XRP community, I thought I'd share this old post by David Schwartz in case anyone is unaware that many of their queries have already been answered. You could have overlooked this if you aren't local to the area. Perhaps you already know the answer to this question if you've been around for some time. The issue stems from the fact that 54 billion XRP tokens are already in circulation. That can appear like a lot when put in context with the present supply of other cryptocurrencies. Some have suggested torching the escrow in an attempt to boost the price of our XRP. Come on, I know just what to say to make this clear. At the end of the day, burning the escrow might be the first spec move we need to sell XRP at high prices. This is the whole idea behind XRP. By the way, nobody is burning escrow. The fundamental motivation behind developing XRP was to address issues with money transfers and make financial transfers easier. The XRP ledger has made the transfer of nearly all valuable assets possible. A few years ago, David Schwartz answered this question by analyzing a scenario where the consumption of XRP for paying expenses outweighs the XRP held in Ripple wallets. This is because all of the XRPs have already been released into Ripple wallets. In such a scenario, Ripple would potentially cease operations. Even though Ripple hadn't acquired a taco yet, he went on to claim that this couldn't occur because of their existing revenue streams from the CBDC platform and digital asset custody firms like Matejko. What occurs when Ripple's XRP escrow expires? However, this is the initial central post. David Schwartz responds by saying, "Guys, this is the official post. The remaining funds have been sent back to Ripple since the escrow began. The conduct of the system from the beginning necessitates the return of XRP to escrow," he adds. In the event that this figure begins to decline, I hope that additional XRP will be required within the ecosystem to facilitate these transactions. This could cause the escrow to go on for quite some time. The supply of Ripple's XRP will eventually run out. Ripple has probably burned through the XRP that the inventors of the ledger allocated to it, if not in a literal sense, but certainly in a more pragmatic one. At that point, Ripple might opt to simply quit and lay off all of its employees. Still, I think Ripple will likely have other projects and revenue sources set up by then, allowing it to remain operational. 3 years ago, David Schwartz raised this issue. Here we are, with Ripple licensing technology to other companies, having solved the original problem of XRP distribution. At first, it appeared like distributing it to individuals would be easy. It was necessary to begin preparations in advance of XRP's widespread listing on exchanges so that it could be readily converted to fiat currency. According to him, it stopped working. Since there was no original demand, no viable market, and all the gifts were gamed, you can't just sell it. For some reason, I've decided to mark the end of our incredibly complex and unexpectedly challenging task with the time when the Wave's XRP escrow expires. Here he is asserting that the first goal of Ripple was to de-escrow the XRP. That was their public persona in regard to mortality. What the guys are essentially trying to say is that the escrow has a function and shouldn't be destroyed. Being an integral component of the environment is also essential. And it will do its job when it's ready, which is after all the XRP has been released. Rollup will have, of course, completed their missions by then. After this, they'll move on to other pursuits. I hope this has been useful for anyone who is interested in learning more about the escrow process. For that, I'm grateful to David Schwartz and Flip the Chain. I realize that some of you may be unfamiliar with this material. But I'm also cognizant of the fact that it's common knowledge to some. The subjective comments shared on Twitter suggest that regulated stable coins will substantially boost the liquidity of an e-liquid system, but it's always a good idea to review the fundamentals, especially when a new landscape emerges. Under addition, the fact that XRP is no longer under escrow is somewhat connected to this. Unfortunately, the infrastructure required for XRP to operate as Ripple envisions it working is not yet in place. I am still not there, though. We are making every effort to include XRP in it. On the other hand, reliable currencies will be crucial here as well. Christian Carlo, a former employee of the CFTC, alright. As a self-styled crypto dad, he shares his thoughts on the future of the industry and illiquid markets, such as stable coins. Although I would like not to specify a date, I can assure you that it will likely be in the near future. It will be here soon, though. It is important that you focus on this. Will I be suggesting that fresh ideas will be developed? Internet banking will change the future of money and finance, just like it has changed numerous other industries. There will be benefits for the US as well. Significantly from the prior analog-based architecture. It will be too disruptive, regrettably, and we cannot afford that. We need to reevaluate this. Yes, the event is going to happen. Now we can choose to lead, follow, or stay in the background. I'm crossing my fingers that we'll choose to lead. Is the topic of stablecoin regulation one that interests you? If that's the case, how about we begin? What are the most important things to remember about that? Building a license framework for stable coins and outlining the roles of the many authorities is, in my opinion, of the utmost importance. Furthermore, I believe it is critical to set distinct limits between them. If stable coins are to live up to their claims of stabilization, we need to know how they work and whether they are based on the dollar or not. I fully support the stablecoin legislation that was submitted in the House. The measure has one flaw, and I did mention it in an editorial piece I wrote for The Hill magazine. It skirts the issue of privacy. Furthermore, governments shouldn't have the power to block lawful social media transactions using stablecoins. Similarly to how the government censored perfectly lawful remarks on social media. Consequently, the issue of how privacy is protected and what data operators of stablecoins can do with it. It is also imperative that we ensure government licensing agencies cannot force lawful stablecoin businesses to prevent legal transactions. In my view, that is the sole issue with the legislation. Legislators are pushing for stablecoin laws, in my opinion, because they need a solution to the problem of shrinking liquidity in the government bond markets, and because they want to create new demand for government assets through stablecoin operators. Must possess. As a surprising outcome of Dodd-Frank, banks are now less likely to hold government debt because of the capital requirements on their balance sheets. But a lot of people say they forewarned you about this. That liquidity has also been helped by hedge funds and proprietary trading firms. Our government bond market has been dealing with liquidity issues for a while now, and this year is no different. I also think there are others who think that if the cryptocurrency industry is thriving, well-regulated, and marked by stable coins, demand for treasury securities will rise. I haven't looked at the topic myself. However, the reasoning is sound. Also, it's not an unfair argument. Stable currency operators, in my opinion, play a crucial role as both payment processors and custodians of public assets, and, in my opinion, resolving the privacy issue is of the utmost importance. In a perfect world, every digital currency system would revolve around the dollar, as I indicated earlier. If it isn't possible, then the euro will determine which ones you get. In contrast, I think that if we fix the privacy problem, people will look for advisors that utilize the US dollar as their foundation currency because they think it's safer than the euro or other digital currencies. Chris offers a unique perspective, and John Carlo delves deeply into a wide range of interesting subjects. This concerns the oversight of stablecoin regulations. Regulating stable coins is something he naturally believes in. The addition of another user onboarding option will have a negative impact on illiquid markets, which he also admits. With such stable coins, we can greatly simplify client onboarding in a tokenized, fully tokenized, or mostly tokenized world. Christian, there appears to be a liquidity problem in the ecosystem, based on subjective comments expressed in this tweet. Although digital assets like XRP could solve or at least mitigate many of these problems, Carlo fails to mention them when discussing stable currency. The escrow is being released in stages instead than all at once, to prevent the market from becoming overwhelmed. That being said, XRP is going to be incredibly valuable when that day comes. My deepest gratitude is due for doing nothing more than publishing that personal opinion. The most current information regarding this individual comes from Adrian Orkenny, who is the Senior Vice President of Product at Ripple Key. In his view, The industry would endeavor to overcome the challenges of 2023 by adopting a new paradigm. Michael Branch tweeted this forecast. With 2023 drawing to a close, Ripple announces its hopeful prediction for the year 2024. The sector is attempting to recover from the issues that occurred in 2023, according to Adrian McCraney. Worldwide, banks are on the lookout for digital asset solutions to meet the demands of their customers for more convenient, open, and instantaneous banking. In order for you to get the Ripple forecasts, I will include a link in the explanation. Given the industry's aspiration to overcome the obstacles encountered in 2023, Turconis has provided the following predictions. As the Bitcoin industry searches for new alliances, attention has shifted away from conventional banking institutions. You can be calm because this idea does not require most of the guesswork about which central banks have joined the Ripple net has been done. Novel and challenging assignments are suddenly appearing in our path. To satisfy their clients' aspirations for fast, transparent, and efficient banking, big banks throughout the world are actively seeking digital asset solutions. True to Chris Giancarlo's statements about the illiquid business, new challenges, and tokenizing everything. In case anyone happened to miss the video I created earlier, I'll give you the URL. You know, this idea that tokenization will happen to most of the world's economies. Right now, it's not even speculation. Here we are at the present time. These higher-ups have been pushing for this for the last decade. A lengthier time is probably in the cards. This is why they are adamant about these transparent, anytime banking options. We have expanded our network of partners in the last year to include several major international banks. Rates of adoption will also continue to soar in 2024, according to our predictions. This will lead to higher adoption of XRP because more individuals will start utilizing it. Tokenized assets will be a test bed for financial institutions. It is critical that they do so securely, in accordance with regulatory requirements, and with little interference to current systems. Listen up, guys, we're seeing it with our own eyes. The entire economy, not just the Bitcoin industry, is going to have a bold year in 2024. While discussing XRP, however. For example, here's some sound advice from Metallica's CEO, as conveyed by Adrian True Kenny: you don't win markets because you have the best product. You win markets because the market thinks you have the best product. Hey, pay attention. Furthermore, you hold the title of engineer. For some reason, I had a hard time making sense of it. You should develop a strong marketing team. Having an excellent product has always been, in my opinion, the most important factor in achieving market success. Well, I happen to be an engineer. Yep, that's completely incorrect. What matters in winning markets is not having the finest product, but rather that people believe you have it. Also, how can you convince consumers that your product is the greatest, despite the overwhelming amount of information available to them? Not to mention that it costs you money. This means that you'll need enough money and enough people. So, if I could start my business all over, I would employ a sales and marketing staff immediately to make people think I'm the best in my field, before I even have a product. This is completely at odds with the large engineering and product teams I oversaw. Because Americans are used to sending items they do not actually have, that is a very difficult goal for a Swiss engineer to execute. I am sorry if alternative ways work better for you. But there are many ways in which that is true. That's fantastic. This was just delightful. The speaker in question is a Swiss national. Knowledge is essentially being poured into the market. Well, everyone knows that Ripple has already made those deals and that word is spreading about their network like wildfire. So, they're light years ahead of their rivals. No matter what, their products are first-rate. Yeah, XRP can definitely do what it set out to do. It won't matter if someone comes up with a quicker cryptocurrency solution than XRP, because Ripple has already formed those partnerships. Among the many applications discussed on this channel, XRP will be the most widely used for tokenization, value transfers, and central banking. To Sento Sumo Saba, I only offer my gratitude for publishing that. The reductions in XRP are also linked to this person. Another one about Metal Photo here. Every little thing counts, so be ready to pounce when the larger dogs do. This is how they see it. At some time, a chain will connect all assets, which amount to trillions of dollars. Attention, astronauts! Seamus Donahue is the author of this one. Be careful, because he is bringing up HSBC by name. One of our guests was Rajiv Tumu. He is in charge of digital assets all across the globe. Even if cautious companies like HSBC see the space as more of a permanent fixture, in the end, all assets will be stored on-chain. So, they won't be adding crypto and traditional services to their current stack and integrating, say, 5% of their clients' assets. They risk having all of their assets piled on top of one another in due time. Their organization's new support system is this. If you plan on holding assets worth trillions of dollars, this needs to be very flexible. This system needs to be available to the public. You had better be prepared to play when the big dogs roll in, because the clients are bringing these people. Even the institutions that will be digitizing it have some work to do. Their customers want cryptocurrency, and the launch of the Bitcoin ETF in January will only drive up demand. Everybody, hold tight and get ready. Because the market is retracing, maybe you should relax a bit today. Until there is a major retracement, do not purchase those vintage coins you have been admiring. Visit my Patreon page at patreon.com/workingmoneychannel if you would want to follow my trading journey this time around. During this bull run, I want to make the most money possible, therefore I'm spreading my assets out among other cryptocurrencies. I would be very grateful for your thoughts on the matter, though that is only my own perspective. The subscribe button is there in case you forgot to click it. I would greatly appreciate it if you could subscribe to my channel and give it a like. Until next time, farewell.